Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So let's update our current view on the euro currency. That's the daily time frame, and if you remember, in our research on weekend we said that we need some pattern that could trigger the potential retracement to the upside in an area around daily confluence support, 132.50, 132.43. That is the also untouched yet monthly pivot point. So, and since market is a bit overextended to the downside and has hit significant target and stands right at the weekly confluence support, some pullback, some respect to this area could follow, and we have to monitor for appearing of any pattern that could let us to enter long with this scalp trade, could justify our entry. And one of the potential patterns that could be formed here is a double repo buy pattern. And you can see, although yesterday's price action was relatively calm, it's very small ranged. In fact, this is the inside trading session for the Friday's action. By this candle we have the confirmed double repo buy pattern, because we have thrust down, closed above the 3x3. The 3x3 of this green line is 3 periods simple moving average, shifted forward for 3 periods, close below it and close above it. So double repo means double repenetration. So that is the second penetration of this green line by close. So we have the confirmed pattern. The one problem here, and this is a bit thin moment, bit tricky moment, that market has not hit this target. It's 1618 extension, because as we have discussed it on weekend, we said it will be perfect if market will open here, touch this target, and then shows the close above the 3x3. That is what we would like to see, but that hasn't happened. Market just closed above the 3x3, now it stands in retracement. Well, that's why it's a bit tricky moment here. Could double repo pattern work without touching this 1618 extension? Well, theoretically it could, but still it's very tricky moment to deal with, because on the lower time frame you'll see that this price action was really fast and market has some momentum, and by this momentum the even minimum extension to the downside stands below this low and below this 1618 extension target. So if market will show for instance intraday ABCD pattern, that could be double repo failure, and based on the Jordan framework we have to enter short with this. Still, that could be some sort of the triple repo or something of that kind, because I can't exclude that market still will hit target and then turns to the retracement. That's very difficult and sophisticated moment currently. How to deal with it? Well, probably it makes sense if you have taken the position with this double repo, place the stop not at the point of the invalidation of the double repo per se, but place the stop below the target of the 1618 extension. This will be slightly lower, but this will give you some warranty, that some protection, that if market will just hit the target and turns to the retracement, you will not be out by the price action. So that's a bit difficult moment. So or even wait when the market will hit it. On the 4-hour time frame, on the another daily time frame, what we see? Previously we said that this is some sort of the stop grabber in the opposite direction, but here you can see market has formed another one to the upside with this small candle. This is also the bullish stop grabber. Well, and it suggests the taking out of these highs. So you can see here we see a lot of contradictive patterns. From the one point of view, we have the stop grabber and the double ripple buy. From the another point of view, we have untouched 1618 target and some acceleration on the intraday charts to the downside that suggests that market in fact could reach this area, could form the new low and cancel both of these bullish patterns. That's why it's very difficult to trade current environment. Even if we take into consideration that overall trend currently and overall price action in the market is bearish. On the 4-hour time frame, what we see? And notice our potential reversal pattern. So if this will be the really stop grabber, market in fact should take out of these highs. In this case, this will be really reversal pattern. Market could show the further acceleration with the double ripple, but this move to the downside is also significant. It's a really nice strong candle to the downside. This is some short-term bearish momentum exists in this action. So shallow retracement, normal is the retracement, and take a look that even minor target 618 extension stands below of all these lows. It means that by this action market could grab the stops, stands right below it, and show the small acceleration touching of the weekly pivot support 1 and touching also the 1618 extension target that stands in this area, and after that returns right back. So that could be the wash and rinse, because market could move to this area only for taking the target and simultaneously grabbing the stops. When this will be done, market easily could return right back and continue move to the upside. That's why the current situation is very sophisticated for taking the position in current moment, although we have the confirmed pattern, but not all is simple with this pattern. On the hourly time frame, what we see? We see in fact Gartley's triple to sell is now developing here. You can see thrust down, acceleration. Market has shown this ABCD retracement right to the 50% resistance. That is also 50% resistance of the strong candle, and that is also the 618 resistance from the thrusting bar. It's hidden Jordan reaction point. It's thrusting bar extreme point right here. That is also the reaction point based on the Jordan, and that could be used for calculating of the Fibonacci retracement levels. So that is also this consist 618 resistance. That is the failure point of the double ripple pattern. And if market will move below it by the close during the today trading session or any within the next trading session, the double ripple treated as the cancelled by the Jordan framework. Why? One thing that I see that could combine simultaneously the stop grabbing, the wash and rinse of the lows, and the survival of double ripple pattern. If market will show some splash to the downside, that will be fast, and market will return right back above this area by the close. So that will be splash to the downside, that will be the stop grabbing at below the lows, but by the close price market will hold above this area, because Jordan demands that a double ripple failure should happen by the close price. So market by close price should be below this 618 support. Okay. So as you can see, it's very difficult situation. Probably if you do not have any position yet, it's probably better to stay flat and wait for the further development. Probably to take position when the market will start to accelerate further will be more simple and safe decision than catching the position currently and meet with this opposite move to the taking out of the previous lows, these lows, by this ABCD development. So maybe you will find some other solutions here. Maybe you could take the position on the double ripple buy, but with the lower volume, and place stops a bit lower, not at the failure point of the double ripple as I said, but below the 1618 target on the daily time frame. It will be a bit extended stop, but still it will be reasonable, because market, as I said, could just show move to the downside, grab the stops, taking the 1618 target and returns right back. This could be a wash and rinse pattern. Another safer approach, as I said, it will be waiting for either acceleration to the upside or wait for the wash and rinse. If it will be really wash and rinse, so market will show move to the downside, will clear out the stops and then show fast return back inside of this range. That will be probably mean that market still could show the upward move. So choose your own way how you will act today. But my preferable solution, as I said, is more conservative currently. To be more conservative, wait for the clear out of the lows and wash rinse, or taking out of these highs, and when the market will continue moving to the upside. This is most safest approach currently. So let's see how it will turn. Don't be hasty. Wait for some clear patterns, and think how it better to possess in current difficult environment on the euro currency.